Today's topic I want to discuss is why are Uber, Lyft, and all the other gig economy apps in the shape that they are. The reason why all these guys are in the shape that they are is because of how they started. What they did is they all went with an idea person who had no stake in the company except for the idea itself, in my opinion. What they did then is they would go to venture capitalists, borrow money, pay themselves a hefty salary, and negotiate a 10% stake in the valuation of the company. The next thing what happened is once these guys got going is they started by overpaying the contractors. As you know, during the early days, Uber drivers and Lyft drivers were paid, $2 to $3 a mile, depending what market they were working in. And then slowly but surely the rates kept getting cut. Slowly but surely. The reason why is because they had to recoup those early overpayments to the drivers or the contractors, whatever you want to call it. So what happened is they started to see that they could actually grow the company at a loss and make it generate a lot of revenue. Hence, then the banks would take notice and they would valuate the companies way higher than they should have really been valuated, because in the old days, a lot of businesses did not operate at a loss except for a very short time, whatever the government allotted them to do so. So that is one of the reasons why Lyft and Uber and all these companies keep cutting the rates now, because now they have to scramble to recover their losses of subsidizing rides and bonuses that they gave out before, and all that stuff, because they were giving out very, very hefty bonuses in states like California. $700 if you stayed on for 30 days and did a certain amount of rides. That's too much. You can't be doing that and then expect to make any money. The way you make money is you grow a business very slowly and consistently. What the CEOs saw is they could grow the business artificially quickly by pricing their services way lower than it should have been ever priced to the consumer, and then they would artificially grow it and get valuated super high, and then they would take their 10%. It's almost like scam thievery or something like that is what you want to call it. So now we're in a position that Uber and Lyft and a lot of these companies are pretty much in trouble because the venture capital is not coming. What they tried to do is they tried to pull the Amazon theory of business, where you can continue to sell at a loss and put everybody else out of business, so you could dominate eventually. It's a speculative situation. Back in the day, Walmart could not do that. They would have to start one store, make a profit, take that profit, reinvest it in the next store, take that profit, reinvest. That's the way Wall Street wanted it back then. Then in the late 90s, we had this tech boom of startups that showed promise. So what they did is they would drive the stock price artificially high because everybody would invest in them, and then they all cash out and become, very wealthy overnight. And Uber and Lyft did the same thing, but the fact that they were so deep in non-profitability potential, Wall Street was not having any of it. So when they IPO'd their stock, it actually went down. Now that the stock has gone down, Lyft and Uber have to do everything they can to recover all their losses due to their business strategy. So that is the reason why Lyft and Uber and all these other gig economy apps are cutting rates, because they're having to figure out how to grow. They're giving things away still and turn a profit at the same time. So that's the way it actually works, because Wall Street will not have any mercy on these companies compared to what they did back in the day of Amazon and stuff like that, because Amazon can dominate. Amazon's potential is limitless. They just continue to sell everything that's on this world by the internet. Walmart does the same thing, but they can beat Walmart because Walmart has brick and mortar, and brick and mortar costs money. People cost money. Amazon has a lot less people to pay. Hardly any brick and mortar except for warehousing. Walmart has stores. And the only way Walmart will be able to compete is get rid of all the stores. And then they will be on a level playing field because products are pretty much paid for the same by each company and other companies that are trying to do the same thing. So Lyft and Uber are not evil companies that are just trying not to pay you whatever you deserve. It's because they are desperate now. And they're probably not going to get much more funding from venture capital. So now they're going to have to figure out how to take little bits of money from the people that do the work, which is usually the way companies do it anyways, i.e. pay cuts, layoffs, whatever you want to call it. Also, the other thing that's happened now is we have a bill called AB5. I'm sure everybody's familiar with it, which makes drivers in California employees, which means that now Uber will have to pay a higher set wage for them, which will in the short term cost them a lot of money. But in the long term, who knows, they could probably overcharge riders and not pay the drivers any kind of extras because of the fact they were forced to pay them a certain amount of money an hour. So that's another reason why they're cutting rates, Lyft and Uber especially, is because of that. Is because the government's starting to get involved, and when the government gets involved, it's not that great for the worker, and the company makes adjustments, and they still win. So those are my reasonings why I think Lyft and Uber and all these companies are in the shape they are now, is because they tried to trick the system. They tried, the CEOs figured out a way to make themselves rich quickly on fake money, and they basically stole it from the company by, getting into the 10% valuation deals that they procured upon the start of the company, plus their salaries. So they already get rich. They got theirs. They have no incentive to try to make a profit. They already got theirs. What investors should start doing if they see these videos, I know my videos aren't that fancy and don't have thumbnails and all that kind of stuff, and maybe they're not even ranked high. But what investors should start doing, instead of trying to trick the system, because that will implode eventually, that's why we had the Great Depression, is because everything was done speculatively. You can't do that with a company. You have to grow it slowly and consistently. And eventually we'll get back to that business model. I know people are bored with growing things slowly and consistently and having to wait 10, 15, 20 years to become rich, but that's the only way that's sustainable in this world. Sorry to say. Everything's been done. I'm sure, yes, people have benefited from this shotgun approach of wealth building through, fake valuations and hedge funds and all that kind of stuff. But that's going to end up imploding, and we're going to have a much worse situation when it does. Just saying. Anyways, my name is Marco Ricciardi. Subscribe, like, share, whatever you want to do. And I'll have some more news for you soon. Thank you.